Yeah, Tokenomics DAO is all about uncovering, simplifying, and sharing tokenomics knowledge. If you've followed us for a while, then you've probably seen some of the content we've created. Basically, the whole point of Tokenomics DAO is that we dive deep into the tokenomics of different projects, protocols, DAOs, what have you, anything that uses tokens, and we try to figure out what are the mechanisms that they use, and what's more importantly, I guess, what's the value creation of the project, and kind of how do they leverage a token to make that happen. And so part of the process of becoming a contributor in the DAO is that our people go do these deep dives and create these long form articles. And Chuck has written one of these, and he chose to cover the project called Flowcarbon. And so today he's going to tell us all about it. We published a Twitter thread, I think yesterday, that Chuck wrote that has a bunch of links and info in it. So you can pull that up in our profile and kind of follow along. And as Chuck's speaking, I'll also try to pull up some of the stuff and kind of tweet that again under this space.
All right, diving in. So, and yeah, I'll be kind of following the flow of the tweet thread. So, like, if you have that up, that's going to kind of be like topic by topic within this tokenomics talk. And yeah, so you kind of know what's coming next if you want to ask a question or request to join the conversation so you can talk. So, starting with why, I think it's always important to start with why. My guy Simon Sinek taught me that. So why does Flowcarbon exist? Why, and even deeper than that, why do people care about carbon credits? I think that the reason this has been a compelling idea for a few decades now, and a reason that a lot of people talk about it within the context of crypto and the blockchain, is that free markets and environmentalism are often at odds with each other. But a lot of economists think that a free, voluntary carbon credit market could help clean up the planet. So, the idea is that if you're polluting, you can purchase carbon credits, which represent pollution that has been contained by a forest or by a project, to offset your pollution. So you're polluting, but then you're also buying offsets for your pollution, so you can be a net neutral or a net positive impact on the environment. And there's, a market for this. It hasn't lived up to its promise. It's been in existence, I'm not exactly sure how long, but at least 15, 20 years. Progress has been really slow. And some people say that efforts to trade CO2, to trade these carbon credits, have done more harm than good. So let's talk a little bit about how carbon credits are produced. So first, a project is undertaken to protect or remove CO2 from the atmosphere. In my tweet thread, I included a link to one of these projects called Colombian Timber. I'm actually an investor in this project. They've bought a lot of land in Colombia, and they're planting forests on this land, and they're growing trees. And so this used to be plains. I think at some point it might have been farmland, but it's been abandoned. I think maybe during the Civil War in Colombia, this area of the country wasn't safe. And so it stopped being cultivated, like wide open space, thousands of acres. They bought it, they're growing trees. As these trees grow, they're consuming carbon dioxide. Trees need carbon dioxide. They breathe out oxygen. And so this project is consuming, it's containing, it's removing CO2 from the atmosphere. These trees are. And so people can invest in this project. And the people that are managing the project, in this case, it's a group called the Gutierrez Group in Colombia. They hire a third party to come and audit their tree farm and quantify, how much, based on internationally recognized standards, how much carbon dioxide is being contained by these trees. They count the number of trees, how tall are the trees, how much carbon dioxide can a tree consume over the course of a year. And for every ton of carbon dioxide that's consumed, and I think this is like a volume measurement of a ton, they issue one carbon credit. And so the issuer of the carbon credit is an internationally recognized agency. This is a really objective thing. And so now the project owner, the Gutierrez Group, has these assets. They have these carbon credits, and there's a market for selling these carbon credits to people or to companies that want to offset their pollution. So in theory, you or I, if say we're traveling for the holidays and we're going to be flying, and we know that airplanes are big polluters and we want to offset that, in theory, we could buy carbon credit or a half of a carbon credit to offset our holiday vacation. This is in the voluntary carbon market. It does exist, the voluntary carbon market, but the reason I say in theory is that it is really hard for you or I to actually purchase a carbon credit in the existing voluntary carbon market. Okay, go ahead, Lotus.
That makes sense. So, Chuck, we just had D-Stacks request to speak, so I just pulled him up here. So if you want to unmute and ask a question, please go ahead.
Yeah, no, I think it's really interesting. I was listening along, and I've been quite involved in a lot of these carbon projects as well, with tokenization. And one of the things that I've realized from talking to all these specialists, so I spoke to Zasti, they're one of the biggest current carbon credits issuing companies. They want to go to Web3. They actually said the selling part, it's really a minor problem. One of the things is that the issuance process takes over 18 months because they have to. It's a crazy process they have to take to actually get those carbon credits in the first place. And people are only focusing on the tokenization part, which isn't really fixing the whole industry. What's your thoughts on that?
Yeah, I think that's been my experience as well. It's not just the trading part of the market that's broken. It's also getting credits into the market for various reasons, like the ones that you mentioned. It's just the challenging process. I don't think there's a lot of companies that are like servicing these requests, like, hey, I have a tree farm, can you come out and measure how much carbon we're capturing? I think it's not a robust market for that. And like in the case I mentioned, yeah, it took them a long time to get these carbon credits, and now that they have them, they don't really see good options for bringing them into the market. They've actually chosen to just hold on to them rather than sell them right now. They're looking at the market and saying, we think that these credits are a lot more valuable. Yeah, it's too cheap. Like, we're not willing to sell them for this low amount. And yeah, there's all sorts of issues. I mean, mismatched supply and demand, for various reasons, like you mentioned.
Very interesting. Well, so basically you're starting out by, I'm just going to summarize real quick. So basically what you've been talking about is, why would we care, right? So what is this, what's the background kind of this carbon market? Of course, we have an interest to sequester carbon from the atmosphere, and trees do a great job at that. So one way to do that is by planting trees and then monitoring, estimating, measuring how much carbon they actually consume. And there's agencies that then issue these certificates to the tree growers, so to say. And because we financialize everything in this world, these credits have obviously been financialized. And so not only is there a market, kind of like a traditional market, but also looking into tokenization of these certificates. And then, and what you've remarked is that basically every step of this chain is broken, and Flowcarbon is hoping to fix some of it, I guess, right? So that's where we're headed.
That's where we're headed. Blockchain first, tokenizing carbon credits can fix some of the problems, but then tokenizing carbon credits introduces some new problems, and Flowcarbon is trying to address those. So, yeah, still a couple steps until Flowcarbon enters the story. I think it's important to note that the voluntary carbon market is fragmented. There's not like a New York Stock Exchange for trading carbon credits, or, it's also like the market is very illiquid. It's closed to retail. So, I'm obviously American, so my examples here are American, but there's not a Schwab or an E-Trade or a Robinhood for you to just be able to go in and buy carbon credits. The intermediaries are really expensive. Like our guest just mentioned, expensive in terms of time, but also it's expensive to get carbon credits issued to you on the supply side. And on the demand side, like if you or I wanted to buy carbon credits, we'd have to pay high fees to even access the market. I mean, it's basically closed to retail. And then the price discovery is not transparent because it's an illiquid market, because it's fragmented, because it's closed to retail, because it's barely digitized at all. It's really hard to know, like, is this the right price for a carbon credit right now? I mean, earlier this year, a nature-based carbon credit was trading for $11. Now they're trading for between $3 and $4. All markets are down right now. But it's not obvious to anybody why the voluntary carbon market moves in one direction or another right now. So tokenizing carbon credits can address some of these problems. It democratizes access. So, cuts out intermediaries, opens it up to retail, who have crypto wallets. There's a lot more price transparency, assuming that, there's like a liquidity pool for tokenized carbon credits against ETH or against USDC, then it's easier to figure out what's the right price for buying or selling these. There's a lot more decentralized innovation. So once these assets are on the blockchain, and they can be used in DeFi, then it just opens up a lot of possibilities for innovators, entrepreneurs, businesses to do things with them. And also, of course, with the blockchain, there's more accountability. So, we talk about how hard it is to get a carbon credit into the voluntary carbon market because of the challenges of documentation and the fragmentation globally of, where these carbon credits are generally being issued in the developing world, where land is cheaper and it's more cost efficient to, grow a forest or conserve land. But then they're being bought and sold in the developed world. And so there of course needs to be like supply chain accountability, which is really hard in the existing carbon market, but tokenization, the blockchain should address that. So yeah, that kind of gets us to why tokenize carbon credits. And there's a lot of interest in this. There's a lot of companies that talk about it. I think it's one of the most obvious use cases for crypto right now, is bringing carbon credits onto the blockchain. Lovis, feel free to jump in at any point.
Yeah, no, I think it's a excellent idea also because Web3 gets a lot of flack for, excessive energy consumption and stuff like that. So I think in a way, it's a really good way to show the world that this technology is very versatile. Like the blockchain technology can be used for all kinds of things, just like any tool, it can always be used for good and for bad, but obviously it's up to us to use it for the right purposes. So I think in general, that's a good thing. It's a good approach. And then, of course, there's a whole debate about carbon capture, carbon sequestration. Isn't it better to just avoid producing, polluting in the first place, or emitting in the first place? But we can't solve all the problems at the same time. So I think it's a great place to be, and I'm curious to hear more about how Flowcarbon is doing it.
Yeah, it is. It's a compelling use case, and it's one that, like, I've heard Mark Cuban on a podcast talk about how he has gone on Polygon, and he offsets all his pollution, and maybe even all the pollution of his companies by purchasing carbon credits on Polygon blockchain. So and then retiring them, burning those tokens. So this does exist. Like, carbon credits have been tokenized, and you can buy them and offset your pollution or your emissions right now. But there's, in the process, over the past year plus, there's been some projects that brought carbon credits onto the blockchain. And they were successful in some ways. And, for the purpose of this conversation and what Flowcarbon's trying to do, I'm going to focus more on problems that these projects faced. So the main problem is that, and like I hate to call them out because I know that, like, they're really trying to do good for the world, but like Toucan Protocol was a project in late 2021 that brought a lot of carbon credits onto the blockchain, like millions. And this is like most of the carbon credits you can find like on Polygon are from Toucan Protocol bringing them in. And their token, BCT, base carbon token, they brought millions. They tried to just bring as many carbon credits as possible. Anything they could find, they tokenized. And this had, I think, an unintended consequence of basically creating a dumping ground for low quality carbon credits. And this kind of opens up probably something that people didn't even realize, that there's low quality carbon credits and high quality carbon credits. For instance, if you are building a hydroelectric dam and you have to, tear down a bunch of trees and displace communities, let's say in the Amazon, to build this hydroelectric project, you can get carbon credits issued for your hydroelectric project because, once the project is up and running, you qualify for getting carbon credits. But in the process of building that project, you had to like destroy a bunch of trees and displace people. So that would be considered like a low quality carbon credit, and one that, it's not nature based. It's more industrial, and those credits are not worth as much in the real world. In the real world's voluntary carbon market, those credits, also older credits, like credits that were issued 15 years ago, the farther back you go, the less valuable a carbon credit. Also, a lot of carbon credits were retired, but because of the fragmentation and retired means used, like I bought it, and like in crypto, we would say you burn the token, like it doesn't exist anymore. But because of the fragmentation of the voluntary carbon market globally, I could buy a carbon credit, and it's not clear to the market whether it's been retired, burned, or not. And so a lot of credits that had already been purchased were then brought onto the blockchain, and it's not clear if they've been retired or not. And in 2022, people did some detective work and found that millions of credits on the blockchain have been retired. So it's like duplicative on the blockchain. And so when these carbon credits were brought on the blockchain, like DAO and Toucan Protocol, the token value went way up. It mooned incredibly in November 2021. And then I think when people realized these issues, that they didn't really know, this token that you're buying, you don't really know what it represents. You don't know if it has any real world value or not. You don't even know if it's doing any good in the world or not. The price just tanked. And now those tokens are worth a lot less than a carbon credit in the real world. And you'd expect them to be worth more because there's so much more you can do with it. In DeFi, using them as collateral, and just the velocity of money. There's so much more you can do with a tokenized carbon credit. But
Sure.
the
I
one,
mean, even
yeah,
just a more access, right? So if more people can buy it and trade it, then you would expect that to increase the price, right? If you create something that only a certain few people can purchase, then it's kind of less interesting.
yeah.
Yeah, but I mean, but to which degree is that general market downswingness and or like related specifically to issues with these projects that you mentioned?
I mean,
Hard to say, right?
it's hard to say because now everything is down 95 to 100%. But
Right.
like when I wrote the paper for Tokenomics DAO, like it was back in May, and the market was only down like 10 to 20% back then. But Klima DAO and Klima's token and Toucan Protocol's token were already down 95 to 100%, even back in May. So
Oh wow.
they you can go on CoinGecko and look at BCT, and it like in November it was trading at like hundreds of times multiple of a real world carbon credit. A BCT represents one carbon credit in the real world, but it was trading at huge multiples of real world value, and then it completely crashed, and now it's trading at a fraction of the real world value. So though, and honestly, this is just my take. I think that project is kind of screwed because BCT can't distinguish. You can't distinguish between a high quality and a low quality carbon credit. You don't know what it represents. It's like a bunch of garbage mixed in with a bunch of gold. And like if you buy one, you don't know if you're buying gold or garbage. So, so let's get to Flowcarbon. So, Flowcarbon, probably in response to this, maybe they were already planning it, but their whole model is predicated on only high quality nature based carbon credits will be accepted. So, Toucan took the approach of we want to bring as much liquidity as possible into the DeFi market for trading carbon, which makes a lot of sense from a DeFi perspective. But Flowcarbon is constraining the supply of tokenized carbon credits, with their token, to make sure that they represent the highest quality projects in the world. So they need your project to be nature based. So like they won't accept any hydroelectric dams or other sorts of industrial use cases for trying to capture carbon. Only conservation, reforestation, and I think there's stuff you can do like in the water, like with algae, to capture carbon. So that's all that they'll accept. Only carbon credits that were issued in the last 5 years, and only ones that are unretired. So you have to be able to prove that the carbon credits you want to tokenize have not been used anywhere else in the world, which is kind of a high bar. So that's kind of the root of what they're trying to do. That's different is they're basically trying to guarantee that if you have a Flowcarbon token, it represents a nature-based, recently issued, unretired carbon credit, that you can feel confident in, that you're buying kind of more of the gold than the garbage. And then with their token model, so they have 2 tokens. Every single carbon credit that's tokenized becomes a unique, basically an NFT, which they call GCO2. GCO2 is backed 1-to-1 by a unique carbon credit. And then once they have a basket of GCO2 tokens that are similar, like maybe a bunch of GCO2s that are all from Colombia, all represent reforestation projects, then they'll bundle them and mint GNT tokens. And GNT is a fungible token which can be used in DeFi. So GNT, you can buy it. They said it's going to be on Celo. It actually hasn't. This project has been on hold for like 7 months. I mean, when I wrote about it back in May, they said they were going to launch in June, and they still haven't launched the GNT token. So, and they haven't really said why. And like, I joined the DAO and I tried to find out why, and like those questions just go unanswered. I assume it probably has to do with market conditions. But anyway, GNT is the token that you would see in crypto and DeFi. GNT, like, you could buy it, through a liquidity pool or through a swap. They've said that they're gonna fund liquidity pools against USDC, against ETH, or I guess wrapped ETH on Celo, and then also against the Celo native token. And so if you buy a GNT, you could retire it, which means you're offsetting your own emissions, personally or for your company. You can also unwrap it. So once you have a GNT, you can unwrap it and redeem it for the GCO2 that it's backed by. And then once you have the GCO2, you could actually swap that for the real world carbon credit. So, this is maybe for like arbitragers. Like, if for some reason GNT is selling for below the real world price of a carbon credit, you could unwrap it, get the GCO2 that's unique, that's backed by an actual carbon credit, get that actual carbon credit, and then find a way to sell it in the real world. In the future, we can imagine that. GNT is, also, there's a lot of things in DeFi that you could do with it. There's markets in this Celo ecosystem that have said that they'll accept it as collateral for lending and borrowing. So, with all these additional use cases, and with, like Lovis was saying, just having that accessibility, more people being able to access it and use it, one would expect that GNT is going to have a price premium over a real world carbon credit, especially because Flowcarbon is essentially guaranteeing that it's backed by a high quality carbon credit in the real world, which doesn't exist in crypto yet. Sorry, go ahead.
No, I think any of this. So I think quality assurance in the whole sustainability movement is very important. I used to work at a e-commerce company, and every year, and this was fairly new, but so maybe 27 to 18, I think they started being worried about being like certified sustainable, and then there's like third parties that will basically verify that. So I can totally understand that that there's a value creation happening on the side of Flowcarbon by basically doing the due diligence on these carbon credits, and I think that is, if that's the value creation, then it makes sense to me that there's a premium on their token, in a sense. And then another interesting thing, though, that I had learned about talking to somebody with a project that's like based, I think, like they want to carbon capture in Africa, but they're currently located in Dubai or something like that. They were talking about how this whole carbon capture business is going to go like super custom. So they were like, they think that in the future people will care, or like businesses will care even a lot more about where the carbon was captured, how it was captured, and to kind of really have like I mean, I guess similar to Flowcarbon, but like they want basically tabs on the whole value chain of carbon, like from the beginning to the end, and somehow being able to capture that and prove that to the clients. So I think that, yeah, it sounds like Flowcarbon is like recognizing a trend, and seems like they're on the right path.
Yeah, it's a lot more of like, I'd say it's a lot more of a company trying to solve a real world problem versus like a DeFi tokenomics project. I think like DeFi adds value here and should add a premium to the product that Flowcarbon is trying to sell. But this isn't really like a Web3 native sort of DeFi application. It's more of like, it's just a real business that's recognized they can probably make money and also do good in the world by leveraging DeFi and just being able to tokenize this asset. So let me just talk a little bit about the GNT token. What information is available about it, even though it's not available, even though the token itself, you can't buy it or use it yet. So on the supply side, it's actually all of the GNT that Flowcarbon has already been sold in a pre-sale to investors. So you have to wait until it's on the market. They've indicated that the initial price on Celo will reflect the real world price of a nature-based carbon credit. And I shared a link in one of the tweets in the tweet thread to Oracle. There's a website that tells you how much different types of carbon credits cost right now. Nature-based is one of the categories. It's one of the premium categories. So that's where the price discovery will start. More GNT tokens will be supplied, unlocked, distributed as Flowcarbon buys more carbon credits from the real world, turns them into GCO2, and then bundles the GCO2 to mint GNT. So there isn't like a distribution schedule like you see in a lot of DeFi projects. It's wholly dependent on one-to-one backing from real-world assets, and so more projects need to come online before more tokens will be released. And so that's the supply side. On the demand side, the two main demand drivers are going to be institutions and retail users buying the GNT token to offset their carbon dioxide emissions. That's one. And that, like I said, you can already do that on Polygon. But if you can do that right now and feel good about what you're doing, but also maybe question what does this token I'm buying really represent? So Flowcarbon is trying to capture more of the premium of you can be sure that what you're buying represents something good. And then the other main demand driver is that this is a real world asset that can be used as collateral for DeFi, for lending and borrowing in the Celo ecosystem. So those would be the main demand drivers. And, Flowcarbon's whole flywheel kind of depends on creating this virtuous cycle where if the GNT token has a value premium over a real world carbon credit, so say GNT is trading for $5 and a real world nature-based carbon credit is trading for $4, then people who own projects like Colombian Timber will want to sell their carbon credits to Flowcarbon, increase the supply of GNT, get more GNT liquidity into DeFi, which should increase, again, its use case as real world asset backed collateral, which, just because of the additional utility and because a lot of that would get locked up, a lot of those tokens would get locked up in lending and borrowing protocols. That supply should lead to more demand, should lead to more supply, should lead to more demand. This is basically, I'm trying to describe the diagram that I made for the paper I wrote for Tokenomics DAO about this project. So there's not a lot of there's not a lot of the things that you're used to seeing with DeFi projects about there's not incentives for staking. There's not yield being offered to early adopters. There's nothing really like that. It's a lot more of, like I said, a company that's trying to bring a real world asset onto the blockchain and then create the infrastructure for people to be able to use it, whether it's to offset their pollution or to do lending and borrowing in DeFi. So yeah, in conclusion, I guess we'll see if Flowcarbon's able to create this virtual cycle, if it all works out according to plan, or if it's just kind of more of the status quo with the carbon credit trading market. Yeah, and if it, yeah, we'll see. We have an example of, you know, a pretty big project last year with DAO and Toucan Protocol trying to do this, and it didn't really work out. And so this might be like V2 of trying to bring carbon credits onto the blockchain. And we'll see what happens.
Yeah. Interestingly, the 101 article on DAO, I think, is one of the most read or like articles, yeah, that I think we have on Substack. Because I think at the time when Flo wrote it, it was like they were paying like, I don't know, 100,000% APY or something crazy. So it's or maybe it's 38,000%, I don't know, but it was in the tens of thousands. But of course, when you see stuff like that, you always, you know, one eyebrow goes up and you're like, that doesn't really seem sustainable. Like no matter what they are doing, that seems like a lot. But so actually from like the tokenomics perspective that I like to take, I really like how you describe Flowcarbon as just like a business, right? They've identified a problem and they can solve it, and that creates value, and they're using blockchain technology and tokenization as part of their tools, but they're not like some a little bit more obscure DeFi project. They're actually just, you know, I guess it's like plain and simple, but if it works and it's good, then that's great, right? And I think that we'll see. I think in a way that's honestly what real world adoption of this technology looks like. You know, people will figure out how to use it, how to leverage it in their normal operations. And I mean, DeFi in itself, of course, has a what do you call that? Has its own like claim to fame and applications. But I think it's completely fine that not every token in the space is like degen level taking advantage of all the things, you know, because yeah, I mean, at this point we all know that a lot of stuff in DeFi also can go south really fast. So sometimes it's prudent, I think, to be more on the conservative side, and then if you can actually be in business and make money for a couple of years, then you can still layer on more advanced like derivatives and different things when there's a market for it.
Yeah.
But yeah, cool, man.
I like the way that you frame that. And yeah, personally, I'm with you. Like the projects that interest me are more, I guess, just the boring stuff, like, you know, just trading currency for real world value. And I think we're going to need to see a lot more of that if we want to increase adoption and kind of build our way out of this bear market.
Yeah, I think that's what's happening. Yeah, and I mean, if I, you know, just selfishly plugging the Tokenomics DAO, I mean, we didn't go degen in the beginning, but we had our humble beginnings, but we're trying to focus really heavily on value creation, and a lot of that is visible in the content that we create. And by we, I mean, you know, amazing contributors such as Chuck, who take the time to research this and write a 10-page article about it with all the details and providing this info in a more digestible format. Because often with tokenomics, the info is really hard to find. It's buried somewhere deep in some white papers, or you have to join the Discord and ask questions. And like most people simply don't have the time or the motivation to go do that. And so as part of the DAO, we're trying to do a lot of this heavy lifting and bring this together and make it, you know, easily digestible, ideally, so that anybody can understand it even without a PhD in economics. And so, yeah, if this sounds interesting, definitely follow, stick around. You can get involved. I'd even better get involved, right? And then also, not to forget, we're launching this new thing called the Tokenomics Hub. And the prototype is live at tokenomicshub.xyz. You guys can check that out. There's about 20 protocols or so in there. Kind of a new format where we're trying to break it down even more and make it even more easily comparable. And so the idea for Tokenomics Hub is that it becomes like the single source of truth for all things tokenomics. So it's like really specific just tokenomics. You know, we care a lot less about some other coin metrics that you might find on CoinGecko or CoinMarketCap or something like that. We really care a lot about like the value capture, value creation of these projects, and how this is how this translates into the token design. And yeah, it's a great time to be here. I think bear market is the time to build, as they say, and then we'll still be here when it turns around, and hopefully go to the moon together, even though we don't have a token. So it's not what I mean. I would just mean like be successful as a group.
Yeah, wag me, right?
Yeah, exactly.
Yeah, I love the Tokenomics Hub. I think it's a great product that you guys have started building. Really glad to see that. Congratulations on launching the beta for that project.
Yeah, thanks, man. And we need to get Flowcarbon in there. So there's a next work package in there for you or somebody else who wants to pick it up.
Awesome. Cool. Well, thanks for hosting me. It was a fun conversation, and thanks everyone for joining.